right, then we want to record.
If you want, it's already recorded.
Okay.
Wait, so no. Oh yeah. Okay. All right. Live.
I might try to host a watch party too. Make sure your computers are on mute if you're looking at the comments.
Yeah.
Yeah, make sure whatever's playing the video is on mute.
Yeah. So is it streaming right now?
Yeah, it's streaming. Let's see here.
That's
Is that live?
No, that was a test video. So.
I can delete.
Well, was live, yeah. That's.
Whoa! Everyone jumped in here and they're already asking questions.
Ready?
I think I'm in the right video. All I see is Dia's. Okay, here we go. Yeah, the first little test that you guys did, everybody was like jumping in there.
Oh yeah, I know. Is this live now?
That was the one where you yelled at me.
I didn't yell at you. Much.
Your boy Emilio's in here.
Oh, he is?
I wonder why. Hey Dan, are you commenting as Investor Underground? Because I'm commenting as myself now.
I guess, because I'm the one hosting the meeting, right?
What's a short sale? What's up, John? What's up, Chris?
What's up? Shout out to Emilio. What's up, man?
I can't see the comments.
Are you on the page?
I'm trying to find it.
It's all good.
Oh yeah, there we are.
Yeah, we got a little bit of time.
Okay, Anthony, can you man the Facebook group comments, because we're streaming both directly to the Facebook group and also the Facebook page.
Man them
we're
as
gonna
in
be able to see the
respond
comments
live
over here.
Yeah, well, you closed it out. That's what I mean. You screwed it up.
Oh, I screwed it up.
Yeah, you closed it out.
Okay.
How to set
How
up?
come we can't see the live feed?
It's right there. It says live. That's the.
Yeah, but there's nobody viewing.
Yeah,
Oh, there it
is.
is. 3 people.
And you guys need to take your you're like screen sharing. You need to take your
Okay.
your participants off the right hand side.
Oh, okay. I see what you're saying. There.
Is that better?
We'll see. It's got a delay.
I don't see any comments.
You also have to open up the Facebook group. Remember?
My mic sounds like
No,
it's
you
far
don't.
away.
No, you do. Remember, I told you.
Talk louder.
That's you, and you said you wanted to do it that way.
Okay, but I can't see any comments here.
I
Remember
know.
we're supposed to be at the bottom? Right?
Carrie, my mic, it sounds like it's real far away.
See, there's comments there.
I'm like right up in the screen.
Okay, but that's the group. Here's the page. And where's the comments?
What do you mean the comments?
The comments should be at the bottom, like streaming up, right? I don't see any comments.
There's no comments yet, except for this person joined.
Oh, is that?
Dude, it was good. You know, just working it.
How come we saw
On
comments in the
hold
group?
a little bit, but
Because they're two different sources.
Michael
I
Hartel's in
asked
here.
you
What's
about,
up,
and you
bro?
said you wanted two different sources.
John says, "Hey Dan, what happened to social distancing?"
Wait, hold on.
Oh, wow. I'm just going to make sure everyone can hear my mic in the video because
I can barely hear Anthony.
Why is that? I don't understand.
I can hear you fine.
Say something
That's
again.
weird.
Okay, I can hear you better.
Okay.
Yeah, that's better. I just had to turn up my volume.
Cool. We got 30 people in here.
Whoa.
Maybe we should just
I only see 4. How do you see 30?
Yeah, I invited a ton of people. So, what's up, everybody? I hope y'all are well.
I'm going to
I don't get it.
try and host a watch party, but I don't know really how to do that.
Yeah, me either.
Well, everyone, we're going to get started here in a couple seconds or a couple minutes. I'll be kicking this thing off. I'm just trying to get comments over here, phone over here, computer over here. So give us just a sec. I'm going to try to host a watch party real quick, but I don't know how to do that. So
I don't think you need a watch party because everybody's already watching.
Well, no, to my friends.
I can barely hear it.
You have friends?
Yeah, just a few. You know what?
How much do you pay them?
You would never know how many friends you have until you have a bunch of cool cars and a trailer.
And
the
whiskey.
trailer is where everyone is like, "Oh, hey, bud. By the way, I need to use that trailer in the next
trailer.
All right. Let me get up into the page real quick and just share
Give a
this.
shout out to Trish Curran. What's up, Trish? And John George Alvarez and Chris Mays. What's up, Chris? Who else we got? Emilio Kim. I haven't seen him in like light years. What's up, Emilio?
Yeah.
I thought you died, man. I thought
Shout out to Emilio.
God.
Oh, God.
I thought we like missed the funeral invitation or something. There's Carrie Ross. What's up, Carrie?
Okay, cool. I'm going to start this watch party. Oh, man.
You have another, you have the fourth source of comment if you do that, Anthony.
That means you got to keep up with more streaming.
Oh, I'm not moderating my own watch party. I'm only moderating this screen over here.
Okay, well, just so you know that that's going to happen.
Look, I am the only straight up official IU right now. I'm like hosting, got my shirt on. Y'all don't even have your shirts on.
Man. I forgot my shirt.
Dan doesn't even have his whiskey or his shirt. What's going on?
Shirt. Speak up.
I know. I'm
Exactly.
not prepared at all. I got no IU shirt, no whiskey. I'm really slacking today. Emilio says he died and came back to life. Thank God. There's Bob Cornelius and Craig Potts and Ginny Sorens. But
Nice. Well, anyways, it's 7 o'clock and we got 40 people in here. You guys ready to kick it off?
Yeah, we're ready, man.
All right, cool. Let's see. Welcome to Investor Underground, everybody. Tonight we have Dan Castro. I guess Dia is joining us here tonight. I wasn't expecting that, but always welcome. And we have it's the more the merrier, so it's all good. I'm the only one wearing my shirt, repping IU tonight. We have Dusty Kohn in the house, and he's going to be talking. He's our special guest tonight, and I brought him on for a really specific reason, and I think we all agree that it's something that's definitely got to be talked about with some upcoming opportunities. So let's kick this thing off. Welcome to IU. We are not a guru-based group. We are a Uru-based group, and what that basically means is that basically there's no one single one of us that's smart than all of us put together. So we are a Uru-based group. I kind of butchered that a little bit. Hey, we haven't been doing the live meetings. It's okay. I'm trying to learn the intros here. So anyways, we're with Dan Castro tonight. He's a 27-year veteran real estate attorney. He owns a brokerage and he owns a property management company. And this guy has taught me from the ground up how to do the things that I know how to do, that a lot of people are asking me how I do. Well, it's like this guy right here taught me a lot of what I needed to do here. And we have Dia, which I didn't prepare a bio for. Dan, you should introduce Dia.
I'm just a token Asian because they needed someone diverse and female.
You guys are kind of hard to hear even on the Zoom meeting. So
Dia's here because we are also live streaming to YouTube. We have a YouTube channel now, guys, and I didn't know how to do it. Neither did Anthony, so we had to bring in the Asians.
I've done it before, but I'm not going to get back into all that. Yeah. So anyways, I'm Anthony Garrett. I own multifamily. I own a property management company with Dusty down below me. We manage multifamily buildings together. Kind of a veteran flipper. I don't really flip houses anymore, but I've probably flipped about 100 of them. So that's a little bit about myself. We have Dusty with us tonight. He's going to be our guest speaker. A little bit about Dusty. He's a licensed realtor working on becoming a broker. He's with Realty TX. He began working for a pretty large property preservation company in Austin in the mid-2000s, which led to him becoming licensed in 2006. He was an REO agent in 2009 and later ditched the banks to basically start helping homeowners and help them avoid foreclosure and salvage their credit by doing short sales. He's completed hundreds of short sales with the majority of servicing companies, most of them using a creative wholesale release of interest or release of option. It's going to be hard to keep those two in line, but for tonight, we're going to say he releases his interest in some of the short sales that he does, or most of the short sales that he does. He has bought and sold properties across Texas using creative financing and runs a short sale negotiation company called Real Estate Mitigators. Everybody say what's up to Dusty. He's the man.
Thank you, guys. Thank you. What's up, everybody? Glad to be here, and thanks for having me. Looking forward to it.
For sure. So Dusty and I met a few years ago. We were just talking real estate. We just kind of all came together. Like at first we were just kind of talking about real estate. He was doing totally different stuff than what I was doing. And then come to find out he was in a band that I like freaking grew up listening to. I was like, oh my God, I would go to all this guy's concerts. I had no idea he was even in the band until I met him. Of course, we're both like covered in tattoos, so we have that in common, and we both have kids, and we're, our wives are friends now. So we've been hanging out for a while, and then we've been doing commercial and multifamily stuff. So I need help with acquisitions, and he's the go-to for all of that. We run a really tight show. It's been a little tough lately. Things are kind of on a bit of a standstill on the commercial side of things. Everyone's just kind of holding tight, but we are also preparing to launch our property management company for small apartment complexes together. So we work a lot together. How have you, Dusty, been kind of keeping control of yourself during all this virus stuff? What have you been doing on a daily basis?
I mean, aside from, daily drugs and alcohol and, everything bad, I'm just trying to take it, I'm like everybody else, I'm just trying to get through it. But, no, I'm just joking on the drugs and alcohol, by the way.
Yeah.
But
but with all the kids bouncing off the walls.
Yeah, it's challenging, homeschooling and all that. I know a lot of those people are watching this probably going through the same stuff. I mean, but honestly, I worked from home for a while before this anyway, and so it's not too different. But having having the kids home from school and that sort of thing adds another layer to it. But yeah, man, just trying to stay motivated, trying to do at least one thing every day, like Dan has said before, sharpening the axe and that sort of thing, trying to pick some things, a few things to focus on, man. And
yeah, I haven't really stopped in the beginning of all this. I was just talking to Dan about this earlier. I was just like really in a good place before all this. And then I feel like I kind of got slapped in the face with this whole thing along with everybody else, right? I'm nobody special, but like, for a while, I was just really irritated and frustrated about having to like stop everything I was doing, and I was on a really good roll, so that was hard to do. But now I'm just like, look, let's do what we can, and the rest of the day is kind of just. I think everybody's in a different position, and it's affecting them differently. But mine is just like I can only do so much during the day, so I'm not going to try to like stress myself out and do like 100 things and just kind of like spiral myself into a black hole of trying to stay busy. So I've just been chilling.
Yeah, I can agree with that. I think the general pace with everybody's slowed down, I mean, it's kind of, one of those things that was just unpredicted, and just no one can really help it even if they want to. Everyone wants to speed up, but they're kind of forced to slow down anyway. So it's just weird.
Well, the reason that I wanted to bring Dusty on and I asked Dan to do this is because I feel like and we're going to get into this, we're going to talk a lot about short sales and what a short sale is, and we're going to go through the whole process and all kinds of awesome things that Dusty does. I mean, like when I hear that someone's doing short sales still, even pre-COVID, like I'm like, seriously, how are you? Like I can't do short sales. I've tried to do a few short sales and they just like never work out, and I'm like, I'm done. So Dusty's going to go through his thing. And then I was thinking like everybody knows that there's kind of a lot of opportunity that's coming along soon with a lot of the stuff that's been happening with the virus. So, we've talked about this in great detail, but like the next 12 to 18 months, there's going to be a window that opens, and I feel like it's going to kind of shut pretty quick. But I think there's a lot of opportunity for foreclosure opportunities. And with that is going to come it almost feels like maybe, and we'll talk about it, that we could go back to like the mid 2000s in terms of what the marketplace looks like. So we'll dive into that a little bit. But I'm excited to get started. Dan, is there anything else that you want to add before we jump into it?
Good job. Yeah, I think you summed it up just right. I mean, Dusty's kind of a guy that's out there, been kicking butt for a long time, but not many people know who he is or how he does what he does. And I think a lot of people forget that short sales are a very, very viable strategy to use. Most people, when they look at the pre-foreclosure list, they see no equity or negative equity, and they just hit the next button, right? But Dusty's going to tell you why he does not hit the next button. He's picking up the gold nuggets that you guys are stepping right over because he knows how to squeeze them for all the money that's in there. And it's a brilliant strategy, and it's been ignored for a long time. So I'm glad Dusty's here, and thanks for the idea, Anthony.
Yeah, and like everybody's so like obsessed with like the sexy thing of real estate, like, oh, let's flip or let's find these assumptions. But there's stuff there's things within real estate that people are, like you said, you're not picking up the little nuggets that are just right in front of you. And short sales is one of those things. What Dusty does is something that I've never even heard of before. Because, most of the time you think, well, you can't assign or wholesale a short sale, but there's a way to do it. And this guy knows how to do it. So if you guys don't have anything to add, I'm just going to jump right into questions.
Oh, just one thing about social media, guys. If you like our video, please go and share and like and heart and all that stuff. And if you have questions throughout, if you comment, we'll try to get whether it's through the Facebook group, the Facebook page, or the YouTube channel, just go ahead and leave us a comment and we'll try to get to your questions to Dusty.
Yep, absolutely. I'm going to be moderating the comments as best as I can. I've got a bunch of questions. Dusty's got a lot of stuff to talk about. So I'm hosting a watch party on my page. If you're watching, I am not moderating that because I am like full spectrum over here. So let's get started. First question, obviously, what is a short sale? What does that look like? Because there's so many people that say, oh, well, a short sale, it must take like a really short amount of time to complete these things. And it's like really quite the opposite. So what does that look like? What's the process? And how are you finding any sort of discount, even in a marketplace like today or pre-COVID, or what's going to happen next?
Yeah. So basically, short sale is don't want to overcomplicate it, but really, a mortgage lender is basically allowing the sale of a property short of what's owed on that mortgage note. And so we go to the bank and we ask permission. It's an application process you got to go through. It's not guaranteed. It's an option, but the homeowner, the mortgage holder, they have to qualify for it. And we're basically asking the bank to sell the property short of what's owed. It's a short sale. So
cool. So that's basically where you're finding your discount. What does that process look like? Like you just say, okay, I want to do a short sale. Where would you find these things? Where is this data coming from? I mean, from like the very, very top, what does that look like in terms of just getting started? What's your process down the line?
Yeah. So, I mean, the majority of mortgage servicers have different lender workout options, such as loan modification and deed in lieu, and short sale is another one. A lot of homeowners don't realize that, or they just don't, they don't put the time into really focusing on that. But as far as like the process of that, I mean, each lender has workout options where they have their own applications online. The majority of them do. You can go online and if you just Google Wells Fargo short sale or Chase Bank short sale, they all have their own application that they put together. And so that's usually just one part of it. There's a little bit more that you need to add to it with a short sale. You're going to need a little bit more in order to talk to the bank and that sort of thing. But basically, when I find the seller who's behind on their payments and they're willing to go through the short sale process, I just simply ask them who the lender is that's trying to foreclose on them, and then go to that website and download the documents that I need for that servicer, because they get updated pretty often. I know a lot of negotiation companies will like hold on to the documents and catalog them and hold on to them for a while, but they get revised pretty often. So with situations that change all the time. So I just, I have my little, like a welcome package that I developed, and it consists of like a third-party authorization form. It consists of some certain disclosures and that sort of thing, explaining that, we can't necessarily guarantee that the bank will do the short sale.
Yeah.
And I put that together with the specific mortgage docs that I get online usually. And then it's a matter of faxing those documents. Yes, you gotta fax them in or email them. So
stuck in this stone age of still faxing stuff. I've seen them get better at emailing, but that's key to have like a welcome package for them and everything or on their current form. I mean, because if you're using an old form, I could see them just being like real petty about it and saying, "Oh no."
Exactly. They'll make you go get a whole new one.
Dusty, I have a question. You said you go to the lender's website. Dusty, you said you go to the lender's website and you download their documents. What specific documents are you looking for on their website?
Yeah, so if you simply like Google Wells Fargo short sale or any of those keywords like that, a lot of them will point you in the direction of their mortgage assistance, information, which typically contains like steps and directions that leads you to links to their documents. As far as the documents you want to get, it's a request for mortgage assistance application is what it is. A lot of them will also have their own third-party authorization form that you'll want to download. Those are the first two steps for sure. Third-party authorization, if the lender has their specific version, it's probably best to have that. I have a kind of a generic one that I just include in my welcome package when I'm working with a homeowner, in case I don't know who their lender is, or if they don't have one posted on their online or anything like that. I just have a generic one. But the third-party authorization form and the request for mortgage assistance application is the other document that you're going to want to look for.
And the third-party authorization is basically the seller or the homeowner is giving you permission to talk to the bank on their behalf.
Exactly. Yeah. You and your company, and the homeowner has to sign it. Sometimes certain lenders will need like passwords or like, they'll want a certain like last 4 digits of our tax ID or something like that. But, that's always a pain in the butt because we'll send in the documents and we'll like wait a couple days, make sure they get imaged, then we'll call back and they're like, "Oh, your third-party authorization. I see your third-party authorization. It's signed and everything's good, but you don't have your own tax ID, last 4 of your tax ID on it." It's like kind of a pain in the butt. So you got to do it over again. And so.
Yeah, I've been there a lot. So is that like where you're starting, kind of where you're just kind of in the middle of it, getting started, obviously?
So when I send in a short sale package, I'm usually sending in a whole complete package. I don't want the bank to come back and ask me for anything else. If they do, it's very minimal, missing something here or there.
I feel like that's where most homeowners get tripped up on doing the short sale themselves, is they're just so incomplete about everything. They just kick it back until they're toast.
So I can run down I can run down a checklist for you guys if you want, as far as what's kind of included. Dan, you got a question?
Yeah, before you do your checklist, I just wanted to remind you guys to be looking at the questions and the comments because people are asking you.
I'm responding and I'm writing them down.
Oh, you are? Okay, so you're going to come back to that later. Okay, go ahead and proceed.
Cool. Good point, though. So for the checklist, what's typically included in a short sale, like you said, a lot of homeowners fall out because they just get hung up on the document. It's like almost 50 pages of documents, but the list isn't that long. It's just the amount of documents is that long. So the list contains the third-party authorization form, the request for mortgage assistance application, like we mentioned. Mm-hmm. You're also going to want to provide the borrower's financials. Basically, what that includes is the last 30 days of pay stubs if they're employed. Mm-hmm. Some lenders want 60 days, but majority of them will do the 30-day pay stubs if they're employed. If they're not employed, I'll explain that next. But if they're receiving any type of benefits, we need their award letter for Social Security or unemployment or anything like that. They're going to want to see a copy of that award letter. The other part of those financials are the last 60 days worth of bank statements, all accounts, all pages, If they see transfers from one account to another and they don't have those statements, they're going to request those statements too. So it's 60 days of most recent bank statements. And then we also need to, one of the biggest thing, I mean, I'm kind of jumping ahead, just jumping into this checklist, but I want to give you guys some nuggets too up front pretty quick. But the biggest reason why a bank would do a short sell is because the homeowner has a hardship. Like, that's kind of the biggest qualifying factor to a short sell. There has to be a valid hardship, whether that's unemployment, divorce, relocation, you have to move, death, medical bills, that sort of thing, just reduction of income in general. You have to have some sort of hardship. And so with the short sale package that we went through the borrower's financials. They also want to see a hardship letter. And that's where the borrower explains, hey, I lost my job in October of 2019, and in my welcome package that I have, I provide like a little sample that kind of almost like a template where they could just personalize it and allow them to, use it to influence their own story. But yeah, and so the next part is that hardship letter, which is going to need to be signed and dated. And it's just a brief, it could just be like 3 sentences just explaining, the hardship and what's going on with their situation.
I think the theme here is, I'm sorry, Dan, the theme is having a system and having your documents together and having a pattern. Like Dan and I have preached checklists at every single IU thing that we could possibly ever talk about. So it's the same thing. It's just having a process, your docs in order, and a checklist.
Yeah. So, question on the hardship letter. On the hardship letter, does it have to be notarized in affidavit form?
No.
Really?
No, it doesn't. It just has to be signed and dated. Yeah.
That's crazy, because I would think that would lend itself to abuse. People could claim almost anything, especially in the COVID-19 scenario.
True. Yeah. No, you're absolutely.
It's more opportunities for Dusty right there, just not having the nonsense.
It does, but it also those situations happen like when Hurricane Harvey came around. You know what I mean? There's kind of a similar situation where foreclosures were postponed. FEMA came out and designated areas of disaster and got involved, and so I'm sure there were times then where people were like, "Hey, my property is devastated, or my situation is devastated by Hurricane Harvey." But true, I'm sure it happens. But yeah, just signed and dated is the typical requirement of the hardship letter. Okay. So
you want to add to your check? Keep going down.
Yeah. So after the hardship letter, you're going to want to have so every short sell, you're asking to sell the house short of what's owed. So the bank wants the property marketed for sale. Not only do they want to market it, they want it marketed by a licensed realtor or a brokerage. And so there has to be a realtor involved. So we need a listing agreement. They're also going to require a purchase agreement to sell the property. They're going to go, that's what the approval process looks like. There needs to be some sort of purchase agreement or buyer in the situation to gain approval, or at least get the opportunity to figure out what the bank will take, really. Because that's usually my goal. My goal is to usually try to purchase these properties, but if I can't purchase the property, I want to know what is the lowest the bank will take, and so I can move it one way or the other.
So you do have to be licensed to market it? Do you have to be licensed to negotiate it?
Yeah, so yes, you do have to be licensed to negotiate it, and especially if you're charging a fee or something like that, you're going to need to be licensed. And when I say charging a fee, I mean charging a fee to like the homeowner to do this, or to the buyer to do this, because that's where a lot of negotiation companies get paid, is usually from the buyer. Right. A lot of other ones. And so, and don't get me wrong, that's usually where I try to get paid too.
It's my understanding that you shouldn't ever pay a loan mod company or a short sale company until you've been approved and the docs are set forth to do so. There's a lot of...
Yeah, you never want to charge any upfront fees or anything like that ever. Exactly. And that's part of my package too, is a disclosure saying that I'll never, they can cancel at any time, and I'm not charging them anything up front. And it's called the Mars disclosure. Y'all can check that out. It's a MARS, Mars disclosure. That's part of my welcome package. It doesn't go to the bank, but it's just between me and the homeowner.
Mars, that's something that you created?
That was something that I don't know if that's, I don't know, like you probably want to have an attorney draft it up. There's probably some templates out there. I'm not sure.
Well, like, what does it stand for? And like, it's not something that you made for your system, proprietary, right?
No. What does it stand for? That's a good question. I can't even remember what it stands for. I can look really quick, but I've been using it for so long. I can't remember what it is. It's just more an agreement to explain that they can quit doing business at any time. And
knows.
I don't know, but I was going to ask Dusty, what is it you're disclosing to the debtor?
When we're disclosing to the homeowner, that we can't guarantee the results, and we're not making any promises to make their payments for them. They can cancel at any time. We're not, taking any money from them. That we are, So I have a disclosure. I have a disclosure for the negotiation company, and then I have a disclosure for myself as a buyer when I'm a buyer. And they're pretty much the same. They're two separate agreements, but they're pretty much the same. That I'm not making any promises to make their payments on their behalf, that sort of thing. But yeah. So the Mars disclosure though is more of the income. It's just more of a compliance disclosure.
I just want to touch over. There's a question in here from I think he's scrolling. Bavesh basically is asking where are you finding your data? So to kind of recap where we've gone so far is Dusty's doing short sales. He's probably finding a lot of data off of any of the marketing that he's doing that Dan and I have talked to. Pre-foreclosures is probably a huge driver of the data for short sales. You can answer that question too, Dusty, but basically we're capping up. A short sale is not because it's just taking a short amount of time. The bank is taking a short on the dollar amount that they will accept in return for basically releasing the debt that they owe. And we'll go through some of the process of what that looks like in terms of credit and how much does that cost and what are the risks and things. But Dusty's doing short sales with banks and he's sending his own package out, which is super organized and there's a system in place and he has his docs and he's being super consistent. So when you're working with lenders, you're basically trying to bulldog them into doing a lot of things that you need them to do because they're not exactly super, I wouldn't say that they're super motivated. It depends on the marketplace, but they're also not really rooting for you to get your stuff done. So you kind of have to be the driver in all this.
For sure. And thanks, Dale, for throwing that out there. It is the Mortgage Assistance Relief Services, that Mars agreement. So, and then looks like Stuart provided a link to one as well. So it's just more of a compliance disclosure that you just keep to your, between you and the homeowner. But just to finish up that checklist, you got we went through the listing agreement. We went through the purchase agreement. With the purchase agreement, you're going to need proof of funds for the buyer. If it's an LLC, you're going to need to provide the member docs for the LLC because the short sale lender wants to make sure the transaction is arm's length and there's no relation between the buyer and the seller or, family related or business related. It has to all be, if there is, it just needs to be disclosed and it needs to be approved. But they want the member docs to see, who the members are. And so, yeah, we got proof of funds, member docs, and then you also need the HUD-1 settlement statement showing what the bank is netting and all the numbers and all the figures. That's the whole checklist that gets sent off to the bank.
Dan.
Question. So when you say proof of funds, if I have third-party lender financing, all I really need to show is my down payment that's liquid in my bank, and then a letter of approval from a lender, or what? Exactly,
a pre-approval from a conventional lender. If it's a business line of credit, we can proof of funds that way. Bank statements, obviously, if it's a cash deal. But yeah, just any form of solid proof.
Cool. Well, there's a couple questions. What's the risk? We'll get to these because they're nested within my questions.
Cool.
We've got a couple here, but I think some of these, the one that I could point out now is if someone's wanting to know if you'll send them your checklist and you don't feel obligated. I mean, we just went through it, so the email is nested in the comments if you feel like sending someone your checklist. It might not even be written down, but
cool. Yeah.
So anyways, just trying to, I'm trying to acknowledge the fact that people are asking a bunch of questions, which is awesome. So how much does it cost a homeowner to do a short sale? Like what are they going to end up paying you, or how does that work?
Yeah. So typically, all we ask for is their time and cooperation and participation. We generally try to get them a little bit of money back at closing. Through
cash for keys kind of thing, or like
basically it's relocation assistance is what it is. Is what the lenders call it, and it's a line item on the HUD. What's up, Dan?
I thought by definition the seller could not get any cash at closing.
Exactly. So it has to be approved through the short sale lender. Most short sale lenders, if the homeowner is living in the property, and this is mortgage servicer, like it depends on who the lender is. Not every lender does this, but majority of them do. If the homeowner is living in the property, then they qualify for relocation assistance as long as they stick it out and don't move away. Yeah. But it's a line item on the HUD that has to get disclosed to the bank, and it comes out of their net. Yeah, most like FHA, they allow up to $3,000, between the first 1 through 120 days generally of a purchase and sale agreement.
We're not calling it purchase proceeds anymore. We're calling it relocation assistance.
It's not proceeds. Yeah, the proceeds line item is $0. It's another separate line item on the HUD for relocation assistance to the homeowner.
And so you negotiate that relocation assistance up front when you're in their kitchen, I guess, right?
I explained to them that I can try to get that to them. It's not guaranteed, because what happens is the bank is all they're worried about is their net. Like they want to know what is this thing appraised for, and then after they do an appraisal, which we'll get through, that's where they determine what net they want, or what they'll accept as a minimum net required to them for the payoff. So a revised payoff basically. And so the relocation assistance, when they determine the net, if there's other liens on the property like HOA or some other judgments that might need to be taken care of or satisfied, then that relocation assistance money is allocated towards those junior liens. And so the junior liens get taken care of first. Anything left could be eligible to go to the homeowner for relocation assistance.
So who determines how much the relocation assistance is?
It's the short sale lender does. The short sale, it's only the maximum is $3,000 basically, because the lenders don't have to do it. So, but right now, like FHA is $3,000, their maximum, and the other lenders have followed suit. That's what it is in Texas. I haven't done anything outside of Texas. It may be different for California. I don't believe so, but maybe. I know it went back several years ago in 2014, 2015. They were allowing up to $10,000, and so I got to pay two ladies, two big checks, two $10,000 checks for relocation assistance for going through a short sale.
To answer Sean's question, no. If the homeowner asks the mortgage company for a short sale, they do not. I would assume they do not automatically offer them money.
Or don't they offer them money automatically? No, I mean,
no.
For a short sale, don't they?
I don't think so.
No, I mean, like nothing's automatic. I wouldn't say that. Everything has to be approved and underwritten and that sort of thing.
So how much does it cost a homeowner to do a short sale with you?
Sorry, yeah. To answer your question, basically nothing, just the time and their cooperation. We try to make them money in the end. And yeah, that's really it. We just need it's a long process. Like you said, it's not short. So we need to make sure that they're willing to stick it out, with providing financials, that sort of thing. That's really the biggest thing is just, or like showing the property, if we need to make it active. We need to make sure that they're, willing and able to do that.
Okay. So there's really no cost that you're charging the seller to do a short sale. It's really just the bank that you're going to charge it back to.
Yeah, exactly.
Or your release fee, and we'll talk about that here in a minute. I want to go through like the basics of what this stuff is, because there's so many misunderstandings about short sales in general, which is probably why there's a lot of people listening right now, which is super cool, or watching, because I think, nobody, unless you're doing stuff like you, or there's probably some professionals in here that do it, like it's really, there's a lot of myths to it, and you're in the trenches. So a lot of this stuff I'm trying to cover is leading up to how you do the creative sort of stuff with the short sale. It's not just you're just getting paid a commission and you move on to the next.
Totally. Yeah.
There's better ways. So if somebody's going to be doing these, they need to understand my next question too, because a lot of people don't talk about this. And I've heard people right in front of me at appointments that I work with talk about this like it doesn't affect somebody. So how is the homeowner's credit affected after the short sale? And what does that process look like? Because there is some stuff to understand there for someone doing short sales, and also someone going through the short sale as a homeowner.
For sure. So first off, I'm not an attorney or anything like that. So
we've got one on right now.
We've got one on, but I am not one.
Look at him. He just popped over like he was doing something else over there. What? Attorney, huh? Oh, wait, we have two of them. Shit, I forgot Dia. Oh, always.
There we go.
Attorneys. One night I was sitting in a bar with these two, and there was like 6 other attorneys, and they were all from different countries. And I was like,
You retell the story. Your number of attorneys in this story increases.
Every time, yeah. Next week it's 10. I think there was probably a good 6 though. What? There was a Russian attorney, and then there's a Mexican attorney, and you're Asian, and then what? There was a white attorney, and then it was just me, fucking loser, sitting there. Like
Anthony was like a minnow in a shark tank.
Yeah. So anyways.
So to answer your question, the way I see it is they've been missing, these homeowners have been missing payments for a while already, to the point where they're getting foreclosed on. Missing a payment on anything on your credit is usually a pretty big hit to your credit. And so their credit's like sinking already in most cases. And so we just basically stop the bleeding. We try to stop the bleeding. We try to get that account satisfied one way or the other. Typically, how it's reported in most cases, when what we go for in the short sale is an approval letter, and that letter is treated as the new payoff for that homeowner and that seller. And in that approval letter, oftentimes, depending on the bank, everything's like dependent on the bank, because every bank's different. But oftentimes in the approval letter, there'll be like terms there based on how it's being reported to the credit bureaus, and it's usually satisfied or satisfied less than, or some sort of form of that. And so we try to basically help them in that way. Typically, I don't know exactly how long it stays on your credit for. I think that just probably depends on the situation and the person, but
yeah.
FHA will look at a borrower who's gone through a short sale. FHA will look at that borrower for another financing opportunity after 2 years of completing a short sale.
Interesting.
So,
I thought it was 3, so it's 2.
Yeah, 2 years.
Okay. So talk about deficiency judgments real quick, because it's not always just like, oh, hey, your credit got dinged. You could owe the money that's left over on that.
Yeah, I haven't really seen that in Texas, to be honest with you. I did a deal in Washington State, and they were wanting one out there. They were making the borrower sign another promissory note, basically, for the difference. So what Anthony's talking about is when you sell a property short of what's owed, you got a balance that's up here, and you sell it down here. Well, this difference, it's called a deficiency, and the banks have the opportunity to issue you a deficiency judgment, which will follow you around, or they could treat it as income and send you a 1099-C at the end of the year.
Yeah.
And so in Texas, I've only seen the 1099-Cs, and so not to say that it couldn't happen. I just haven't seen it.
I've done some surprisingly, I've done USDA loans, and there's a USDA office in Georgetown. And you can walk in there and talk to these lenders in there. And I've done a few short sales with USDA, and they were super simple.
Yeah.
I mean, I couldn't believe how simple this was. And the lady was just calling me saying, hey, yeah, we've got these. If you want to buy them for this price, they do not negotiate. You can buy them at that price, but they do deficiency judgments. And I've talked to people after the fact that actually have had those things come back and they owe.
Yeah.
It's because it's a federal thing.
So it's funny you say that, because me and Antonio, I think Antonio was watching earlier. Shout out to Antonio. We have a USDA short sale that we're going to be closing on. We're supposed to be closing on it tomorrow or the next day, I think. But man, exactly. They're so fast. Like,
are you talking to the lady over there in Georgetown?
I'm not. Actually, Antonio has been kind of leading the way on that one. He kind of got in the mix of it, and it's just been like the point of contact with USDA. I'm just like, hey, ask him this, or hey, send him this. And he's been helping out a bunch on that. But based on, communicating with him, like, and the responses that he's sending me, it's like super fast and super easy.
Yeah.
I've done a couple of them, and yeah, but they did ask for some additional paperwork that's saying that the homeowner may be responsible for something. They have to fill out this application to pretty much prove insolvency, which is pretty much what they have to do. And that's kind of my, going back to the deficiency and the 1099-C, when people hear like, oh, it gets treated as income, that kind of scares them.
Yeah.
But really, from my understanding, there's ways of avoiding having to pay those taxes on that deficiency. There was the Mortgage Debt Forgiveness Act that was passed. I don't know if it's going to be renewed or not, but that's been a big help on keeping people from, or at least allowing people to avoid having to pay taxes on that deficiency. Dan, you got a question?
Yeah. So is that one of the things?
Dan's awake.
Yeah, just barely. Is that one of the things you have to disclose in the Mars disclosure, that they could get hit with a deficiency or get tagged as with income with 1099?
Yes. It's probably, I'm not sure if it's in the Mars agreement, but it is in my disclosure that I have for the buyer, for our buyer's disclosure.
So you have a separate disclosure of your own aside from the Mars one?
Correct. Yeah, I have one. So the Mars is more of just a general compliance one. I have a short sale. My company has its own disclosure package that we explain that this is a possibility with the deficiency. And then also when I'm the buyer, I also use one as well, just to cover my bases.
He also said that the banks will list out terms for that too.
Yeah. So in regards to,
we're like frozen in time over there, so I thought you guys like timed out or something.
Oh.
You were just like stuck.
So
let me ask this question.
Listen, y'all are way too close to each other without having masks.
Get away.
Get away.
Okay.
Wait. There's a question from YouTube that you guys can't see, but it's a good question. So Mike DeLeon on YouTube says, what's the advantage for the homeowner of doing a short sale over just dealing with an investor and selling as a sub 2, or just selling it outright?
We're going into that. That's 2 questions down. Do you want to go? You want me to skip over into that?
No. Just address it whenever you're ready.
Okay, gotcha. Real quick, we've been asked a few times. Just give us the short and narrow, Dusty, of what is the timeline for? What's your average timeline from start to finish? This has been asked a couple times in here.
Start to finish, if you have a short sale where that has a buyer, and it could get approved, probably about 4 months, 3 months, 3 to 4 months. I mean, the USDA ones, that will happen in like a month, probably.
They're quick. Yeah,
they're quick. Yeah. Because what happens is the process. They got to get all the documents. They got to review them. They have to order an appraisal. That's part of the process, and that's where the bank determines their value. And they got to underwrite that, and then they got to review the offer, and then they got to review the numbers, and then they got to counter. And it takes time. So it just depends on what the offer is, what the appraisal is. Generally 4 months. Some of them definitely take longer. I still have short sales that I've had for probably like over a year at this point. I just keep, they won't go away. I'm just like, go away.
Like 90 to 120 days.
Yeah.
Cool.
Yeah.
Okay. So
yeah.
Interesting. Dan, you all right there, bud?
Yeah, I'm just responding to people's questions and comments on Facebook here.
It's odd. You guys must be like just itching inside to talk like you always do.
We decided that we're going to let Anthony run the show this time, and you're doing great, man. It's really hard to keep my mouth shut, as you know. It's even harder for Dia. But I drugged her and gagged her earlier, so you're doing great though.
Thanks. Yeah, it's all right. I like doing this. It's cool. I really like speaking live more, which is weird. I wouldn't say that a few years ago, but so you can't be doing this all by yourself. So can you tell us about like what your team looks like? I mean, how many people do you have? 50 people doing these things for you, or
no? I mean, to be honest with you, like the volume, it always depends on how much volume we're doing. And right now, I only have about a little over 20 at the moment short sales that I'm doing. So I do other deals.
Shitload of short sales for someone doing short sales.
It is, but it's manageable.
I actually said that, like, yeah, I'm just over here doing like 10,000 at once, but it's.
But I told you though, like some of the I've had probably like one or maybe two that I've had for a long time, but
different phases.
True.
20 is a lot to have going on, I mean, that's a lot of leads, regardless of the phases that they're in. So he has 20 going on at once. I mean, that's a lot of leads coming in too.
Right. So I get referrals. I work with realtors. My team consists of realtors, a lot of realtors. They help me because I do short sales in multiple markets. It's not just Austin. It's San Antonio, Houston, Gerald, Temple, all over, Corpus, El Paso. I'm trying to think, obviously Dallas and that sort of thing. But a lot of my team is realtors, and I have a few people to help me make phone calls through the day. That's really it. With the amount that we have, we're not having to touch every single one every single day. So, but at the same time, we're trying to keep the wheels turning, and I get referrals. So I work with realtors, and either they can be the realtor on it, or they just want to send it to me, and I can just kind of show them how to do it. I mean, I work with realtors in different ways of helping them turn that lead into, to monetize that lead, really. So
yeah, if I have a short sale, I literally give it to Dusty, and we've done we've actually done a few leads together that have not closed, and we've got some kind of funny stories about it. Like we worked a short sale. I think it was through you. I can't remember. No, it wasn't USDA, but man, we've got some funny stories about stuff. So Dan's got a question.
Yeah. So aside from all your referral sources, I mean, it takes a while for somebody to build up that kind of a referral base. But in the beginning, did you just start by scrubbing the pre-foreclosure list? That seems like the most likely place.
Yeah, exactly. Me and Emilio, actually, shout out to Emilio. We would basically mail the pre-foreclosure list and postcards is what we would start it on, and just try to get as many opportunities as we could.
I knew Emilio was here for a reason. You're the magnet.
Yeah.
You brought him to life.
That's my dude.
Dead.
Yes. I brought him to.
Oh my God.
A short recap.
Dusty is like the magnet for all things success and people. I think somebody told me one time about him that he could slip upward on a banana peel like into success somehow.
What?
Yeah.
Pretty good.
So definitely, like when I hear the word short sale, I'm like, I'm not even touching it. I'm just giving it to him. I don't want to do it.
Yeah, that's so complicated, man. But if you can perfect your art like Dusty can, I mean, this sounds like a good deal. But so for all the guys out there like Anthony who doesn't really want to do this, but he wants to make a little pocket change out of it, are you giving referral fees when people send you these deals, or how does that work? Because we got a lot of people listening that may not want to go through the complex strategies that are involved here.
Yeah, I mean,
of course.
Absolutely. I mean, it's like everything. You have to have systems. You know, systems are what's going to make it moving most efficiently. So, I mean, it's yeah.
I mean, like I'm trying to move away from single family as a main sort of driver for, you know, I'm like I said in the beginning, like Dusty and I are doing multifamily and management things that are different than single family. Like, but I have people, shout out to Tanner Schmidt with Net Worth. I mean, they're an ultimate resource for me. I mean, he basically takes whatever I come up with and turns it into a check. So I'm assuming, and I would assume that Dusty would be doing the same thing. Like I said, if I hear the word short sale, I'm just literally calling him to do it, and you know, we could split the workout, or he could do the whole thing and just cut me a check for the lead. It wouldn't matter to me because the process is tough, and you're just plug and play, giving him the referral.
For sure, yeah. So Ruben was asking, "What's up, Ruben?" He was asking, how does the investor make money on the deal? So I negotiate short sales for investors too. Most investors' objective is to buy that property, and so they get paid by purchasing the property. If they don't get their price, then what we do is we just market it for sale on a retail level and try to get the thing sold. If I'm in a position where I can, you know, put my contract in, or that investor, basically the way that investor could make money, like myself, is by releasing their interest in the property to another buyer, and that's done through basically a little bit of paperwork. We disclose to the bank what we're doing. You know, I don't want to get too far ahead of what questions you have, Anthony, but the investor gets paid either by purchasing the property, or they can release their interest for a fee to a new buyer. Ruben, I think me and you did a deal in Temple, or I did that on not too long ago. I think the last deal that me and you did was one of those deals. If you look at the HUD on that one line, like 104, you'll see my fee on there. I think it was, but yeah, that's typically how that investor will get paid.
What kind of financing are you using to secure the closing?
Private lending right now. I have a little bit of private money, so I have to target smaller markets right now just because of that. But yeah, so I don't really market to the Austin area or anything because of that.
So private lending, private money, cash, obviously, if you have it, or you could get a loan, or you could do.
Totally.
They allow hard money. Is that
yeah. They'll allow any type of money as long as you can show, you know, proof of it. And
okay. Can you do a short sale on a VA loan?
Yeah.
Okay.
You can short sell reverse mortgages as well.
Oh wow, that's interesting.
I don't really know why people would, because like typically, I mean, well, unless the borrower is still alive, obviously that would make sense. But in most situations, when reverse mortgages are getting called due, it's because that borrower had passed away. And so it only affects that borrower's credit if it gets foreclosed on. So kind of defeats the purpose of doing a short sale, because a relative couldn't, you know, necessarily, I don't know, unless they just didn't want to see the house go through foreclosure. But anyway, just a little.
So right before we get into like the juicy of because this is all like, it's not just doing the short sale that we're about to talk about. It's the creative kind of way that you're doing your short sales that maybe not a lot of people have even heard about. And I certainly haven't even heard about this before I met you. And I was like, what? You can do that? So before I get into that, I've got one more question. I don't know if we have any other comments in here. I'll look through them while you're answering this one. But we've kind of gone over a lot of my questions already, but what's the incentive for the homeowner? I mean, why would someone do this? I mean, I know that we've kind of touched on this, but like, why wouldn't someone just sell their house outright, or allow someone to do an assumption, or what a lot of people call it a sub 2 or whatever? I mean, they have a lot of other options, right?
Yeah. So, I mean, the incentive for them is just to get it off their plate. I mean, a lot of them are on the brink of just giving up anyway. Unless they've been approached, you know, unless they have equity, you know, if they have equity, then it's not a short sale anyway. That's a more, you know, either buy and hold, rehab, or, you know, wholesale opportunity, something like that. So really the incentive for them is to avoid foreclosure, not having that foreclosure ding on their credit, on top of all, on anything else. A lot of them have been through bankruptcy and that sort of thing. So they'll have bankruptcy on their credit. They'll also have a foreclosure on their credit, and also, there's that relocation assistance incentive, depending on if they're living in the property. That's another motivator to help kind of initiate the process and get it going. But in regards to, looking at it as a sub 2, I mean, it all depends. I mean, if the reinstatement is $40,000 and it needs another 30 to 40 grand in rehab, and you're at like break even when you're at your all in, I run into that a lot. If it's a sub 2 option, yeah, I'm going to take it down sub 2. Anthony knows I just closed on one in El Paso of all places, just because it was such a great deal on sub 2. I was like, I can't pass this up. And so
I would say someone that doesn't want to remain as the debtor of record, because there are people that just don't want to let you do a sub 2 or an assumption. I have to call them assumptions because Dan's here on the line, but you guys.
That's right.
So anyways, I would say if the person does not want to remain as the debtor of record, that there's no way they're going to do an assumption. They're going to go with something else, like a short sale,
Yeah, right. I mean, it's case by case, like your other typical deals. I mean, it just depends. If the numbers make sense, yeah, take it down as an assumption, or take it down with any other exit strategy in mind. So
yeah.
Okay. So this is a super newbie question, just because we're getting a lot of, I think a lot of people are confused in the difference between assumption deals and short sales. So, what is that relationship between them, and how do you get to that decision-making point where you're like, this is better as a short sale and this is better or versus this is a wholesale? And I know that you guys have referenced it a little bit in passing, just talking about equity and whatnot, but just for the beginners who are listening, can you just back up a little bit and just, talk about what prompts you to do a short sale versus a wholesale deal?
Okay. Yeah, for sure. So, and just the difference of those two. Short sale, the homeowner's selling their property. They're no longer attached to that property. The deed is signed over to someone else, but also the mortgage is satisfied in one way or another as well. So with the assumption, mortgage stays in their name, the homeowner is still attached, that sort of thing. So yeah, short sale is a sale. They're actually releasing their released from the mortgage as well. So when determining like what the best option is or which way to go, it always just depends on the numbers for me. I mean, if they're severely upside down, then like if there's just no equity at all and reinstatement is just a whole, usually if reinstatement's more than 10% of my all in, then it's usually not a deal for me. If I can't get, because I'm thinking about, on the assumption side, I'm thinking about how my disposition as well. But if the reinstatement if the reinstatement and the rehab are more than 10%, then I'm sorry, I'm so confused right now. Sorry. I started reading some comments.
Pinky up for too long.
I know. I just started reading some comments. I got distracted, but I just don't want my all in to be more than 10% of what I can get back when I resell it, basically. So
I can jump in here too. I would. Are you guys muted?
No, I wasn't shouting.
Oh, okay. Well, there's a reason to do an assumption. There's a reason to do a short sale. They're two completely different types of transactions. And like Dusty said, there's so many people that go into appointments where they have a lead and they want to depict the outcome before they know what's really about to happen. You have to let the numbers talk to you. There's times that I would never do a short sale, and there's times that I would never do an assumption. There's times that I would never do a flip, and I would never do a rental. Like, you have to understand what the numbers of these people's loans look like before you can have that determination of what type of strategy that you're going to use. So did somebody ask what the difference between the short sale and the assumption is? They're two completely different animals. I mean, that's fine. I'm not expecting everybody to know the difference. Obviously, if you're new, you need to understand those two things, but they're totally different and they have totally different pros and cons.
Just a clarification. I'm sure the answer is yes, but so Dusty, when you're approaching this, you're not saying like this is going to be a short sale deal or this is going to be a wholesaling. You're thinking that it could be either, right? You're keeping your options open.
When I contact a homeowner, so if I'm doing marketing, a lot of my marketing is outbound marketing to where I get my phone to ring. I don't usually cold call or anything like that. So when I get a homeowner that calls me that usually wants to sell, I'm going in it as trying to pay for it with cash. But I'm targeting when I am targeting the foreclosure list, a lot of those leads usually turn into short sale or possible loan assumption, but majority of them are just so far upside down, and that sort of thing. But yeah, I'm not going at it with like, okay, I'm looking for short sales. I'm looking at it as all options.
Okay, I have a related question because I was confused by something you said earlier. Because if the debt is really higher than the market value of the house, you would never want to assume that underlying debt. In other words, you would never want to do a subject to, because who wants to be responsible for a debt that's higher than the market value of the house?
Exactly. Yeah, I agree with that.
Okay, so that makes sense now, because it sounds like you are assuming underlying debt on something that could be a short sale, but you're not. There's just a
No, never. If it's little to no equity, I usually go short sell.
Okay,
because after closing costs, after the costs associated with the sale, it's going to bring that payoff down even lower. So if they owe 200 and all you can sell it for is 205, the seller is going to be still bringing money to the table. So we can still request a short sell as long as there's a valid hardship there.
So I have a question for the audience, really. If you guys are liking what you hear from Dusty and you want to know more about the difference between an assumption, i.e. a subject to deal, and a short sale, and how to determine when to do either one, would you like for Dusty to be a guest speaker at the Investor Underground Bootcamp? Because we have never really dived into the anatomy of a short sale. We do it for the assumptions, and Anthony's a really good speaker on that topic. But I think it might be time for a comparison and contrast. If you'd like to have Dusty speak at the Investor Underground Bootcamp, give us a thumbs up or a yes. And then I'll ask Dusty to join us.
Nice.
Thank you.
Yeah, let's get a bunch of likes. Like. I'm just gonna press it as many times as I can.
Yeah. So.
And then like when I go watch this again, it will be all of just my profile picture jumping up. Just all Anthony.
If you want Anthony's shirt and you want an IU shirt, also post in a comment that you want a shirt, because we're ordering new shirts.
They're coming from China.
Shit.
I thought you were like really just giving away Anthony's shirt.
I guess some people.
He found it off a homeless guy.
Well, at the IU meetings, Dan's always saying, "Oh, if you just want to touch Anthony and just sit next to Anthony, just raise your hand."
Yeah.
Not right now, mofos.
Right.
Can't touch me.
Back up.
Okay, well, you guys stole my thunder.
Sorry.
I was gonna have everybody, not because you were talking. It's okay. I will allow such. Anyways, I'm gonna go into the juicy topic of what everyone probably wants to know. What the hell is Dusty talking about? If we could get a bunch of likes and hit the love button over here for Dusty, is about to go into the juicy topic tonight of the release of option, release of interest, as Dan would like us to call it. Go ahead and hit that like or that love button, and we're going to go into that right now because that's what everybody wants to know. We've gone through the whole process of what a short sale is, who can do a short sale, how do you find short sales, what his team looks like, what his checklist looks like, how the hell is this guy doing what's called a release of option or a release of interest, because we have attorneys in the room. what are you doing? What are these creative things that you're doing that nobody else, I've never heard of this before. I don't know that you guys, the attorneys, have ever heard of this, but pretty crazy, pretty cool thing that you can do. Why don't you tell us what a release of option or release of interest is in regards to a short sale?
Yeah, for sure. So basically, I mean, it's pretty much just like it sounds, similar to wholesaling. You know, when you get when you find a property and you get it under contract, you have that equitable interest that you're able to market that paper with. So what I'm basically doing is I'm determining what the bank will take for the short sale. Hopefully it's the value that the bank approved is a low enough value where I can market the property higher, similar to a wholesale. You know, you get the property under contract as low as possible and find a buyer that'll pay a little bit more for the property, and I release my interest to that buyer for a fee. And it's not an assignment, and because short sale lenders they don't want to see a contract that says and or assigns. They don't want the contracts to be assignable at all. You even have to put in your purchase agreement that this contract is not assignable by any parties as well, because you know the Texas TREC contract, it's assignable on its own, you know, but if there's verbiage in there saying it's not assignable, then that's really what solidifies it. So yeah, that's pretty much it in a nutshell. I would say too, to take a step back on the short sale and sub 2 thing, I would say that, you know, one big comparison is that, like, well, short sales, they're probably not for a new investor to go out and, or at least this strategy. I mean, you want to have some sort of mentorship. You want to have some sort of guidance throughout the process, because you're dealing with mortgage lenders. You're dealing with certain disclosures that you have to make, or else you really you have just a high risk of getting in trouble. And so you don't want to do anything that's like mortgage fraud or anything like that. So a big thing that I promote, and a big thing that I do is I disclose what I'm doing 100% of the time to these to the lenders. You know, when I go under contract with a homeowner, you know, I have my own addendum that says that if a higher subsequent offer comes in, I'm going to release my interest to that buyer and be compensated for it. So the lender's getting that disclosure with my contract from the very beginning. And if we do get to the point where I have to release my interest, when I release my interest for a fee, that's a whole nother agreement that it spells out who the parties are, what the numbers are, and that also gets sent in to the short sale lender and disclosed to them, so they receive it. On top of that, I'm also disclosing this fee on the HUD. That's a big thing with short sales, is that any party making money on the deal has to be disclosed. And so, you know, we make sure to disclose. So that's pretty much kind of what that looks like. I get it under contract. I go through all the hassle with the bank to figure out what the bank will take. Hopefully, creating a little bit of a spread. If I could close on it, I'll close on it. If I can't, then I'll just hopefully create a spread there that I can market it with, and try to bring in another buyer to release me out of my interest, basically. So
I have a follow up to that. I used to run a title company, and people used to bring us short sales and then try to assign the short sale, i.e., wholesale the contract to another investor, and the banks wouldn't let us close them. They would say, like, no, you can't do that. We don't want the middleman to be making money off of, if we're taking a haircut, in other words, the bank is saying, why should we let you make money? And so we weren't allowed to do assignments, right? But what Dusty is saying is he found a workaround, and he's calling it a release of interest. In other words, he's saying, I'm the buyer. I have a contractual right to buy this property. If you want me to release that right or to release that interest, I will sign this document in exchange for a fee, which is the same thing as a wholesale deal, really. Yeah. But it's the same thing. I mean, you're getting money from a third buyer to get out of the way. But for some reason, banks are okay with that, but they're not okay with an assignment. But it's a little bit different structure too, because Dusty in this case really is getting out of the way, because the new contract is going to have the buyer's name on it.
Mm-hmm.
Dusty's contract is literally going to be terminated. There should be a termination agreement sent to the title
Exactly.
company, and the bank will go, oh, okay, this guy's dead, or this contract is dead. Oh, there's a new contract. Okay, great. And for some reason, the banks don't care if you call it a release of interest, but they do care if you call it an assignment of contract. So kudos to Dusty for finding a workaround. That's brilliant. I don't know who taught you that strategy, if you came up with it, but man, that's an awesome strategy.
So yeah, so me and Emilio were doing a bunch of these, back in the day, and the banks started making changes, and as they do, and basically started creating these resale restrictions on the approval letters. So as I mentioned, your whole goal is to get this approval letter. And with that approval letter, I mentioned it talks about how it's reported to the credit bureaus. It provides wiring instructions, and it also has an expiration date on it, saying this is only good until this date. But it also, some of them would also include these affidavits, which told you that you weren't allowed to resell the property for 30 to 90 days. And so banks started putting these resale restrictions on the approval letters, and then they also updated the fact that everyone making money on the deal has to be disclosed on the HUD. And so we're like, how do we tell them we're getting paid from this? And so I think back in 2010, I found another really awesome, other than Dan and Dia, another really awesome real estate attorney. Shout out to Jeff Watson. He created this program that provided all the paperwork. Basically, it was something that me and Emilio were already doing, but Jeff Watson created, had his own paperwork that he created. It was a course back in the day. It's not around anymore. I wonder. I'm sure he'll probably pop it back up if things go that way. Maybe, I don't know. But
is he a Texas attorney, or is he out of state?
He's out of Ohio.
Oh, okay.
And so he legislates for short sales and was kind of on the front lines for pushing different laws and things like that through Congress regarding short sales specifically. But so he knows a lot about them and what they like to see and what title companies like to see on HUDs and that sort of thing. And so I was just like, how do I figure out how I'm disclosing this to the bank? How do I figure out what I'm making money and telling this to the bank? And then I found him and he explained it to me and helped me out after paying him, for his time. And it's been working ever since then. So, yeah.
So I have a quick question. So have you found any differences between the states on in how a short sale works?
No, not really. Not really. Other than like the HUD. So like being like really good at short sales, I had to get really good at creating HUDs. And so like I'm pretty good at that, like at a settlement statement. And so in other states and stuff, they had different fees and different stuff like that. That's the only challenges I have. In regards to the process of the short sale, it's all the same. It's all the same.
Probably because it's a federal kind of thing where everything's got to remain pretty much the same because all these lenders have to follow the same guidelines too.
Right.
I have another question, Dusty. Is your goal to follow the 70% rule, where your total out-of-pocket rehab plus purchase is still 70% of the market value?
Yeah, 70 to 75, depending on the market. Yeah, exactly. It's just your what you would pay for it if you could pay for it, as an investor. So
that sounds like the banks are taking a huge haircut, because if the debt is like 10 or 20% above the market value, and you're offering 30% less than market value, that could be asking the bank to take a 50% haircut. That's huge.
So what happens is when we send in the short sale package, all the documents, the 50 pages or whatever, it'll get uploaded. When they get to that offer, that'll trigger an appraisal. The bank, the short sale lender will trigger an appraisal out to that house. It's a third-party appraisal. And guys, this is where all the magic happens, is the appraisal. Like that's where everything goes down, because if you get a high appraisal, then it's going to be tough. You're not going to buy it. It's going to be tough selling it to anybody, and nobody, like the homeowner doesn't win. Only the appraiser that got paid to go out there wins probably. And so what happens is I make sure that my team is the point of contact for that appraisal, because I want to know when they're going out there, so I can make sure that I'm out there with them. And my whole purpose of being out there is, if you're a realtor, it's kind of similar to a traditional deal where you would go out and provide all these, all your updates and show how awesome the property is, and how, they just put in new floors and a new roof and a new this. Well, with the short sale, it's the same thing, but I'm pointing out all the defects. I'm like, hey, the roof is messed up over here. The AC is out. Here's and I'm providing repair estimates for that as well.
That's a pretty important takeaway, because I've done the same thing. I always walk with the appraiser if I'm doing a short sale. Everybody should.
It really makes a difference.
Show them things that they don't know about that you know about.
Mm-hmm.
So when you're doing that walkthrough, are you saying that you already have in your hands a written cost of the rehab?
Correct. Yeah, I'll have actual estimates for the AC, the roof, the foundation, if it's needed. It's the cosmetic stuff the banks don't really care about, which kind of sucks. But they don't really take that into account when they do their values. But yeah, I want to try to provide as much support and as much like ammo as possible. I bring a copy of my contract. I'll bring comps out to it as well. And sometimes, appraisers will get mad at that. But I always just tell them, I always just tell them, like, hey, I know you got to do your own work on this. I know you got to do your own research. I just want to give you as much information as possible that I have on the property, so you can get a really good, clear picture of what's going on. And I also explain to them too that, hey, you're a really important part of this process. We're trying to help the homeowner avoid foreclosure. I would say we're, because it's really both of us. And so I just kind of paint the picture of the homeowner situation and explain, like, hey, we're trying to help this person. Anything, and here's all the information. I know you got to do your own work, but let me know if you have any questions. And so.
And he's right about the appraisal. You can go all the way to that point, and still it could get jacked up just from that one little 10-minute walk that this guy is doing. And I've been there.
So let me ask you this. Have you ever had an appraiser chase you away and say, hey, you can't be unduly influencing me. You have a conflict of interest. You're the buyer. You're trying to illegally influence my report?
No, I haven't done that. I haven't had anybody run me off. The only complaint I've had is providing the comps. And I explained to him that, yeah, you don't want to influence it. A lot of people say, to go influence it. And I just want to, like I explained, I just want to make sure you guys have as much information as possible, specifically numbers, because the numbers matter. Like when you have a repair estimate that shows that's from a local company that put it together, that shows the scope of work and amounts, then it's going to hold much weight than just like, oh yeah, check the roof out over here, it looks bad, or a swimming pool that's full and green. It's just kind of an Easter egg that way. And
you can send them that stuff too.
Yeah.
A lot of times they want to look at it. I have showed up for every appraisal, residential and commercial, that I've ever had. I've been there. And a lot of the times what I have found is that they ask me a lot of questions too.
Mm-hmm.
So you can't ever just influence these people. I mean, it's not like you're trying to be the mob or bring them a bottle of wine or something. They're going to ultimately do their work and have their own opinion, regardless.
So how do you get the appraiser to notify you when he's going to be at the house? Because you're not the homeowner.
No, so I just make sure that the bank has a member of my team's phone number to call whenever I basically just say, hey, can you put my phone number down as a point of contact for the appraisal? I literally call the bank and ask them, hey, I want to make sure you have my phone number, and they'll take it down. And a week or so later, I'll get a phone call, or sometimes the realtor that's assigned to it, because I'm not listing these deals. I'm a licensed agent, but I'm not listing these deals and the buyer. You can't do that. You can only wear one hat, and I'm usually prefer to be the buyer if I can. So, if an investor brings it to me, then I'm not the buyer. I'm the negotiation company in the middle, and I could list it if it's in Austin, but if it's in Houston or San Antonio, that's where more my network with realtors comes in and steps in to help.
So Dusty just basically, there should be like a lot of people learning a lot, but there's about, like I typed in the comments, there should be like multiple light bulbs going off for anyone that's looking for like a niche or a buyer. I mean, if you think about this, most buyers that are looking for off-market properties, they only know of a few resources. Someone like me, someone like Dusty, someone like Net Worth, and some acquisitions companies, but this is like totally new and unheard of. So for someone that's looking for something that's off market and it's been negotiated down to a fair price where you can work with it and do what you need to with it, he literally just plugged you into his whole system on how he does it. So for people that are looking for a new marketing niche, boom, there you go. For someone that's looking for a new resource of someone to buy properties from, he just explained to you how he's getting these things and why he's doing it. It seems like it's a win-win all around, but I guess one of my questions would be, why would someone, aside from the obvious, why is someone going to work with you in terms of a buyer? Like, hey, where are you finding these buyers? Why would someone want to buy this short sale? Seems like a lot of hassle. Why wouldn't someone just go work with, a wholesaler or an acquisitions company? Like, why the short sale process? It takes so long,
Like a lot of people, like, I don't know how many homeowners I talk to that are like, man, I've spoken to so many investors. They all tell me the same thing. And then, they just disappear. They never call the homeowner back.
Right.
And so, cause they don't know what to do, or they don't have, they just don't want to, even if they know how to, a lot of them just don't want to do it, go through the short sale. It's just a lot of, when they run into people that are in that situation, it's easier just to, hit next and hit the next number, and so, yeah, I don't know. As far as like why they do it, I think that's part of it, and
maybe a little more structured for certain people.
Yeah, possibly so. I mean, like, I don't know. I just feel like
ramp up to this. Like, it's not just blow and go like an assignment. I mean, maybe it's a personality type kind of thing.
It kind of is. I mean, a lot of people are like, I want to work with you, even over the phone. I've never met them, and it's like I just explain to them. I think a lot of it is just setting expectations too.
Right.
Just like painting the picture, setting the expectations so they know what to expect. And
you're talking about on the buyer side, right?
Oh, no, I'm sorry. You're talking about on the buyer side?
Yeah.
Okay.
To reiterate, like, why would a buyer want to work with you doing this whole lengthy process over just like working with me, where I assign them something in 4 or 5 days as soon as title can get through their process? Like, why would someone want to go through all this? Is it really that deeply discounted, or is it something that someone likes, like I said, personality-wise, like it's more of a structured routine and it's not so like every day is like 30 things to do?
Yeah, I mean, really, I think it's just a good way for them to monetize the lead in general, because like, if they're not going to do it, unless they are going to do it, I mean, they're probably not going to do it. If they want to buy the property, it's just an easier way for them to have someone else do it. And they can go focus on what they're good at, and buying properties or, selling properties or whatever their niche is. But yeah, I mean, I think a lot of it is just, they're complicated. They could be a pain in the ass. They could take a long time, and it requires patience. And so I think a lot of these investors, they just want the deals, and we don't know if it's a deal until 60 days later, type of thing. And so, but yeah, I think just being able to be a knowledgeable resource and help them explain the process and make it easy for them, and pay them even if they don't get the property. It's another incentive for them to work with me as well. So,
right on. Yeah, I see you guys. You're so used to talking. You're like.
So I just wanted to make a really quick, it's just a logistic thing for a lot of people who are asking whether this is recorded, because what Dusty is saying is really important. They might want to go back and watch it. Yes, so it will be up in the Facebook page, the Facebook group, as well as the YouTube channel. So look for the Investor Underground YouTube channel, hit subscribe button. Look for the Facebook page, Investor Underground, hit follow and like. And share the video if you find the content interesting and useful. And yeah, of course, you can also see it in the Facebook group for the next few days. But
yeah, we're like
hop over to the Facebook page and the YouTube.
We're all content driven. Like, has been zero sales pitch for any sort of like extended coaching or programs, or like, yeah, we have a boot camp, but that doesn't even come into play during all of this. Like, you'll find that at our live meetings, we are so it's just packed full of content, and we're spilling our guts. I mean, how many other channels can you go to and like actually have all this content? I mean, I know that these meetings are a little long. We're trying to figure out like, because, you know, like we all have discussed, like I can't sit here for like an hour and watch some of this stuff. But I mean, it is content packed, and you can take away nuggets from this stuff. But you know, we're like an ADHD society, and I am too. And it's like, every 10-second video, if it's longer than like 30 seconds, I'm like, no. But anyway, like it's packed full. So yeah, go ahead.
So here's the $1 million question, Dusty. I mean, you're working your ass off for these deals, and you're waiting 3 to 4 months, sometimes longer, I think. So what's the average fee to get you to release your interest? I mean,
that's such a good question.
I've you know, in the wholesale world, I've seen $3,000 wholesale fees all the way to $67,000 wholesale fees. So
we've got a guy in the room right now with a $67,000 wholesale fee, right?
You know, if you feel free to disclose that, you don't have to, man, because I know it's your proprietary information. But if you,
oh man, everyone's got to throw a little out there.
For sure. So as I mentioned, I'm in different markets. So I'm in San Antonio, and you know, you can buy houses in San Antonio for $50,000. Some of my biggest wholesale fees came from those smaller valued homes. Like, I'm not gonna lie. I would say my average is probably 7,500 to 8, probably close to 8,000 on average. It's probably it.
That's pretty good.
Yeah. That's good, man.
Yeah,
that's about the same as a good wholesale fee, you know.
Yeah, exactly.
All right.
So
that's a really good question, though. I mean, you know, I was just about to ask that. Matter of fact.
Yeah, sure you were.
Okay, so like we've gone through like the process, what his team looks like. We've recapped everything in terms of what this all looks like. Then we've gone into like how to release your interest. What does that look like? What kind of buyers? We've gone in depth about the whole process and what that looks like for you in terms of what this is structured like and what are some of the creative things that you've done. We've answered like all kinds of questions here. I personally, if you guys feel like we've got another 20 minutes or so, we've only been on for an hour and a half, which is a long time. So I kind of wanted to bring, like I said in the beginning, like I wanted to kind of bring on the thought process of like, why did we have Dusty come and talk about short sales tonight? And my thought process was there's going to be a new emerging trend here soon. Like I said, Dan and I have talked about it. I've talked about it with a lot of people. There's going to be a lot of opportunity that is about to pop up here with the virus thing. And when I say opportunity, it doesn't have to be like snakes in the grass, ready to bite people and take advantage of people. It's just there's going to be more leads than there used to be. It's just the nature of the beast as to what's happening right now. Like, let's dive into like what this looks like. Does this look like a mid-2000s kind of setup? It's not going to last as long as what our thoughts are, but it could go back as far as that. And anyone that's been listening so far should have light bulbs going off about even pre-COVID. Like, hey, this is something new that I can do and that I can get into. Obviously, we have a success story with us tonight, but what does that look like? Like, are we going into something? Are you seeing trends for like an emerging COVID type of market that you saw back in like early 2000s?
I mean, slightly. I mean, that's the problem. The thing with not problem. That's the thing with the stuff that's going on now is like stuff's being changed like every day, you know. And just yesterday, I shared a story to my Facebook page I guess earlier today. Yesterday, Fannie Mae, Freddie Mac, and FHA had come out to say that they are not going to require the lump sum payments for these forbearances or these deferments. You know, they're going to work with the homeowner, so they're not going to tank the market. But you know, those are the GSE loans, which, you know, those are all the federal backed loans. So there's also loans that are conventional loans that aren't backed by those federal guys. And so, you know, I like you said, I think there will be a little bit of a pocket for sure. But it may take a little bit. It may take a while to get there. I think, you know, I think it's going to ride flat for a minute, I think. And until
it is right now, as we know.
Right, exactly. I think it's going to continue that for a little bit until some of these forbearances, until people start.
Of course.
their hardships change, you know, because right now a lot of them, they're all going through that hardship of job loss or reduction of income or whatever it is. And so, you know, people's situations change. But yeah, I see similarities and that sort of thing as far as the unemployment goes. But it's just a different animal with the government being behind all these other ones. But there are going to be a lot of loans that are owned by people that are hurting for sure and need to make decisions and need to make really hard decisions. And so yeah, I could see it going that way. I'm expecting closer towards the end of the year, we'll probably see, you know, some sort of, you know, signal or sign from that, but that's my prediction.
What are your thoughts?
So yeah, I agree with Dusty. I think right now it's too early. I think you should, you know, hold on to your cash for about three or four more months until the market begins to drop. I don't think it's going to be as big a hit in Austin as people are going to experience in other parts of the country, just because Austin is generally kind of insulated from catastrophic recessions. It was, yeah, knock on wood. It was that way in 2008, and I think it's going to be that way now. We are going to see a drop, but it's not going to be catastrophic. But so, Dusty, people are wondering, how do they send you leads? Are you willing to disclose your phone number and email? And if you are, I can post it in the comments.
Oh boy, what?
Yeah, I'm happy to share my email with you guys.
Do you want me to disclose that? I can type it, or do you want to type it?
Yeah, go for it. If you want to do that, that'd be great.
Okay, I'm gonna go ahead and type it in the comments.
And just so you guys know too, like I don't have a course. I'm not like selling my paperwork. I'm not trying to do anything that. But you know, if there's opportunities to JV, or if you're really interested in learning more, as you know, and getting into this stuff, I'm totally down to, you know, give a little bit of my time if you're serious. But if you're a realtor, also, you know, I'm definitely interested in connecting with you. I definitely need some agents. I know one specifically over in the Baytown area. So if any of you guys know anybody in the Baytown area, let me know, because I have a listing for you. But yeah, and investors too. Basically, what's going to happen if you're an investor and you have a lead, I have a web form that's set up through Podio, and I'll just email you the web form, and you fill out all the details. It automatically gets imported into my system, and my team can jump on it and take it over from there. And pretty simple. So, but yeah, just kind of.
If I drink the Kool-Aid and I want to start sending you all my short sales, what can I expect by way of referral fee?
So I'm paying 25% referral fee of any of the proceeds made out of whatever I make.
Okay, that's pretty good. That's just free money. Like, guys, if you don't know what you're doing, but you like Dusty, and look at him, what's not to like? I mean, he's a very humble, very genuine guy. He's very, very talented at what he does. He's going to give you free money. All he wants is contact information for these debtors. And look, you got nothing better to do, so send him the information. He's going to send you free money. And you know, as I said earlier, if you want to hear more from Dusty and more from Anthony about the difference between short sales and assumptions and how they have built their mini empires, you know, I'll invite Dusty to be a guest speaker at the Investor Underground Bootcamp. Just give us a thumbs up or a yes, Dusty, or something like that. Okay,
I appreciate that.
Dusty's email in the comments, by the way.
Just first name, last name.
Yeah.
Yeah, and I have Facebook too. So you guys can find me on Facebook. Shoot me a message on there too. There's several ways.
Nice. Right on. Well, I've got some more questions, but you know, we've really kind of wrapped ourselves around a lot of kind of the specifics around the last couple questions that I've had. I mean, we've gone over this stuff for sure. Dan, you know, if you want to give us any insight or idea on what, you know, since we're in this kind of market trends discussion, if you guys have anything to add to what this looks like. We've talked about it in kind of great detail in other videos, but if you guys want to wrap it up, I'm cool with that too. I mean,
I'll let the Asian go first.
Just how long it would take before church sales happen?
About life. Talk to us about life in China. I don't know.
Listen.
Trying to wrap up, Dia. Say something intelligent. I know it's hard.
So.
Oh my gosh. Okay, I think I'm supposed to go first because I'm the token Asian and I'm supposed to say something brilliant.
I wouldn't say that we could hear you real well.
Okay. Wait, I missed the question. What were you supposed to talk about?
Oh my God. Okay, I'm gonna pass over Dia because she's like totally clueless here.
You've been drinking too much tea tonight.
Too much sake.
You're cut off.
Yeah.
You're cut off. Thai tea? Are you drinking Thai teas?
Basically, the whole reason we had Dusty here is because we think there's going to be a whole wave of opportunities coming your way. And there's so many different ways to take advantage of those opportunities. And one of the most ignored ways is the short sale because it's too hard, it takes too long, it's too complicated. But Dusty has this down to a science. So hats off to Dusty for bringing us his expertise. And the other thing I want to say is in the next week or two, we are going to bring in an expert that talks about where the market is headed. We're going to bring to you the market decrease that happened in 2008, how much of a decrease there was Austin wide, and then we're going to identify specific zip codes so that you can know what to expect with COVID. So we're going to look at, what happened in 78704 in 2008. We're going to look at what happened in 78702 in 2008 so that we can try to predict what we think is going to happen post-COVID. So if you're interested in that, please give us a thumbs up. We're still talking to the expert. He's right now crunching his numbers. And we're just, as Anthony said, we're just here to provide information for you guys so you can do your business better, so you can have a few more tools in your toolbox. Because even though we're competing with each other, we are all a family. We learn from each other, and we grow together. There's enough fish in the sea for all of us to survive and to prosper. So I thank you for Anthony and for Dusty for bringing us their expertise tonight.
Yeah, and we are also in the trenches. Like, we're not just gurus, like I said in the beginning. Like, there was a reason to talk about why we're a Uru-based group for sure and not a guru-based group. We're not just teaching this stuff. We are literally out here every day doing this stuff.
Yeah. And I just wanted to add to the whole data analysis of 2008. So we're going to look at 2008 data trends just because no one can predict the future, but at least we can take it, we can learn from the history, right? So which zip codes were hit historically, in 2008. For example, Austin took a lot less of a hit compared to a lot of the other cities in the US. For example, Las Vegas took a really hard hit. A lot of the Florida cities took a really, really big hit. And so we're going to talk about that next week. So if you want to, you're interested in kind of using the past to read the future a little bit, then, join us next week and also hit the subscribe button on Facebook and YouTube. And also, speaking of historical data, based on historical data, the real estate market crashes about 12 to 18 months after the stock market does. And so based on whether you think the stock market already crashed, that starts the clock. So that gives the time frame for a lot of people out there.
Mm-hmm.
And if you want an Investor Underground t-shirt, hit Anthony up. He's going to auction his after the show. No,
yeah, that's right.
We're going to be selling.
Here's my type my Venmo in the comments down below.
Actually, we are going to be buying a bunch of these, and we're gonna make them available to you guys because we are a family, and everybody likes to be a member of a team. Dia assures that she has good contacts in China to get these cheap. So anyway.
China. Yeah, right on. Well, let's wrap this up. Appreciate your time, Dusty. It was great having you guys on, even though we hang out all the time and we talk all the time. Yeah.
Thanks for having me. Yeah, thanks for having me, and I appreciate it. I know we talked about it for a while and never was like the right timing, and like I think this worked out. So good timing for everything. So yeah, thanks.
You're fixing to be on a lot more. So
cool. Yeah, we're going to post this as a watch party after this event because a lot of people only were able to see 20 or 30 minutes of this. So we're going to post it as a watch party so you guys can watch it and share it with all your friends. Amazing job, Anthony. Amazing job, Dusty. Thank you so much.
Thank you, Dan. Thank you, Dia.
Peace out.
All right, we'll see y'all.
See you guys later.
Okay, bye.